If you've ever wondered what your money could really become, you're going to love this. Today I'm showing my actual ULTY ULTY ETF holdings and exactly what they could be worth in the future. The results might surprise you, especially if you think small weekly pay ETFs can't build wealth. So stay tuned. Welcome back to Simply Money. Today I'm going to be showing my ULTY portfolio. I've shared before in videos where I show my entire income portfolio portion, but I'm going to focus specifically on ULTY today. I had one of the comments on one of my polls. I asked, how do you feel about the 9-cent dividend? And a lot of people were excited about it. A lot of people said that's great. A couple people said with this number of shares, I love it, because the more shares you have, obviously that 9 cents per share really adds up. But I also had somebody say way too small. I want to show you on a chart what ULTY can do for you. And we're going to look at some different scenarios of depending on how it performs. If it performs really well and the actual share price grows, if the dividend grows, if the dividend shrinks and the share price grows, like all sorts of different what ifs, because we don't know what the future is going to hold. So we're going to show some different scenarios to try to give you an idea of how this fund could work in all sorts of different market situations. Let's begin by looking at the chart. What I've done here is I have the number of shares I actually own currently. So it's 4,207. The actual cost for me on these is $5.46. The starting dividend amount was 9 cents because I'm using the most recent dividend amount. And I'm starting on this one, and I'll change this and we'll do a couple different scenarios. I'm starting with a 5% annual share price increase. And I know I can already hear people say, no, this is going down. The NAV's running down, all that stuff that you hear. But I'm going to show a positive, and I'll show here in a minute what happens on a negative growth rate of the annual share price. And we're also going to start with a 2% annual growth rate of the dividend. Because if the share price is going up, you can probably bet that the dividend's going to grow as well. We're going to just look at that. That's what we're going to start with. This is our starting balance. So this is year one, week one. That's today. Same amount. Everything's the same as up here. We have $378 of a payment. That's basically what I received this past week on Friday, and I was able to buy almost 70 new shares, and it brings my portfolio balance on ULTY up to almost $23,000. Now I have week 2 through 52 hid here, so we don't have to look at all week over week over week, because that can just get overwhelming seeing all the weeks. What we're going to do is we're going to forecast with this growth rate. This is where we would be in 1 year. So starting year 2, week 1, we would continue to drip at these rates. We would be up to 9,728 shares. The share price would grow to $5.73, would still be in the 9-cent range for dividend payment, and the actual dividend received would be $893. We have more than doubled our dividend payment in 1 year by dripping. Now look at this. We're adding 155 shares in this 1 week, starting in year 2, if these rates hold. My plan, personally, is about 3 years of dripping this, and then I'm going to be using some of that income. It may change. Life is very fluid. You have to just be flexible. But let's look at what would happen. So that would be the beginning of year 4. We're here now, 1 year, 2 year, 3 years is the beginning of year 4. Would be at 48,471 shares. The share price would be $632. Would be getting about 10 cents per share dividend or distribution amount. And that would make the weekly distribution payment about $4,629. If I was continuing to drip at this point, I'd buy 732 more shares, and my value of this portfolio would have grown to about $306,000. This is approximately when I plan on changing over, but again, I have to be fluid and flexible with this. I will see how things go. I will see what life brings. If I decide not to continue to work, if I decide to retire or whatever I do, this may change. But this is just showing this small portfolio portion, just this weekly income of what ULTY can do. Let's look over here. It shows you the share price per year. You can see that growing. You can see your dividend amount year over year for the first 10 years. You're at 9 cents, then you get up here to about 11 cents. It's not a fast growing at the rate that we put in there. Your dividend payment, you can see here that's so exponential over 10 years that year 4 at $4,600 is hardly even registering. Because if this continued like that, this is the exponential growth that you would be looking at. We don't expect it's going to sustain like that, but it's just showing you how small amounts can add up. Now, what I want to do is I want to change this to a negative, because people think that the share prices are coming down and that they'll continue to come down, which is fine. Those that are in this, that understand this as an income play, they're okay with that. Let's go with this as a negative 5%. Each year, this is going to drop negative 5%. As you can see, that made a huge difference. It gets it out of control. But let's go back to year 4. Now, the share prices dropped down to $4.68, but I'm buying almost twice as many shares as I was if it grew 5%. You see how that works? Because the share price is dropping, if the dividend remains the same or grows, you're bringing in huge amounts where you're buying more and more shares and growing your dividend payment in such an exponential way that it just takes off into an avalanche type mode. Okay, let's say that the dividend isn't growing. People say, well, if the stock price is coming down, the yield is going to remain about the same. Fine, let's put negative 5. Let's see what happens. The share price is dropping. Equally, the dividend is going to drop because the percentages, the yield percent is going to stay the same. Whatever the yield that they're paying out, let's say it stays the same. You can see year 4 again, we're still getting 53,000, almost 54,000 shares that we've accumulated. Our share price is down to $4.68, so people are scared that it's going to drop. Our dividends are down at this point to 8 cents. You're like, well, our dividend's dropping. That's dangerous. Yeah, we obviously want as high of a distribution as possible, but if the price is coming down and this percentage stays the same of what this yield is, look at this dividend payment, this distribution. For 1 week, you're still at $4,159. And this is in a market where you're losing 5% annually in share price and losing 5% in distribution at the same time. You're buying 888 shares in this 1 week to add to your cumulative shares. In 3 years, you've gone from $22,000 to $252,000, even with negative shares. I want you to understand that this is important to see. People who are interested in income funds, this is something that you might want to look at. Not ULTY necessarily. I'm not telling you to buy ULTY, but these high yield covered call ETFs do have a place in some people's portfolios. Now, again, this is not financial advice. This is for informational, educational purposes only. You're going to have to make your decisions because personal finances are personal, and you're going to have to do what's best for you and what you feel comfortable with and what fits within your goals and your risk tolerance. But I want you to see the power of these small distributions. And the big thing about these accumulation of shares, the more shares you are accumulating, the more powerful this becomes. Okay, let's do a couple scenarios. Let's say that the share price drops 5%, but the actual distribution drops 10%. Now, we may not like this. It's meaning that our yield is getting smaller in comparison, but let's see what happens. Now, in this scenario, we have 44,423 shares that we've accumulated by year 4, the beginning of the 4th year. After 3 full years, we've accumulated 40,000 extra shares. Our distribution dividend is down to 7 cents. We're still at the $4.68 because we kept the share price drop to 5%. We're getting a $2,900 payment per week and adding 622 shares on this week. Now that's a pretty big drop, 10% annually on the distribution, while the share price is dropping 5% as well. Okay, let's Do another one. Let's say 15%. Let's say this thing's really coming down fast and we have a negative, oops, sorry, that's 15% growth. We want 15 decrease, 15%, negative 15%. Isn't that strange? The faster our share price drops, the faster our share quantity grows. We're up to 67,715. Our share price is $3.35. Our distribution per share is only 7 cents. So we're getting a $4,400 payment. We're getting 1,300 more shares, and we've got a value of $227,000. As long as the yield stays about the same percentage as whatever the underlying stock price is, it's okay, whether it's growing or shrinking. Now, if we have, let's say, a 15% growth, but a negative 10% in dividend, that's where you're going to see an ugly situation. So if the stock price goes up and people are like, oh, yay, ULTY's going up, look at this. In year 4, we'd be up to $8.30 per share. Our share total value is still great, $214. And our distribution, still nothing to snub your nose at. It's $1,693. But you see, you're actually getting less if the growth is up and the dividend is down. The ideal situation, which don't expect this to happen, but would be a negative, let's say a negative 15%, and let's go with a positive 5%. And I'm telling you, this is going to be crazy. This is very, very, very unlikely to happen, because as the share price is going down, the yield is going to stay the same. That means the distribution per share is going to come down, but it's the same percentage. 8% of $100 is 8. 8% of $50 is 4. But it's the same yield. It's the same percentage. So if your share price drops down, your dividend drops down, but it's the same percentage. Look at this. Watch this as I hit enter. Look at that. That's crazy. Now, that's not going to happen. You're not going to see ULTY go down to, let's say in year 4, to $3.35 and your dividend per share go up to 10 cents. Now, I'm not saying it can't happen, but it's highly unlikely. I would love for it to happen. I would actually love this, to keep seeing 9, 10, 11 cents like we've been seeing, with the share price actually dropping rapidly. Some people will be like, well, what's going to happen? What if they split? I talked to Mike Koo of YieldMax, a strategist with YieldMax, and he gave us a really good explanation. You can check that out on our video on our channel. Listen to Mike's explanation of that. But a stock split is nothing negative. A reverse stock split in ETFs like this isn't the same as a reverse stock split in a company who's struggling, because the underlying funds are still doing well. You have to look at the underlying companies of ULTY, and if they're still doing well, it doesn't matter if the share price is coming down. In fact, those of us who are dripping in particular love it, because look what happens. Year 4, I would be up to 145,000 shares. Fine, they're only at $3.35 each, but I'm getting a 10-cent distribution. That's $15,000 a week off a $22,000 investment after 3 years. Yeah, I would love for that scenario. I don't know about you. I would love that. That would allow me, if I wanted to keep dripping, 4,500 shares, and my share price beginning my 4th year, after 3 full years, my total value would be $486,000. And this is incredible. And look at what, I'm not even looking at 10 years. We run out, I'd have to expand the columns to get these numbers in. Here we are down to $1.49, $1.26, but getting a dividend of 14 cents. Again, that's very, very unlikely to happen. What's more likely is the 15% drop, and let's just say a negative 15% drop. This is probably much more likely. In 4 years, I'm getting a $3,000 a week paycheck. Again, I don't know what these are going to be, but this allows us to play with it and see the different scenarios. I'm fine with all the scenarios that I just did. If this grows and it becomes a, quote, growth fund, which it won't, but if it did and they just kept the distribution the same, as the share price is going up, but they keep the 9-cent distribution, that yield percentage is getting smaller. So I wouldn't have the same compounding, but my total value of my portfolio would be going up. For me, in the accumulation phase, I'd be okay with that. But if I was in the pure income phase and just wanting income for expenses, then I probably wouldn't like that as much. I want the higher distribution, and I'm okay with the share price dropping down some. Not a problem for me. What do you think? What are your thoughts on ULTY? Are you in ULTY? If not, why not? If so, what do you like about it? How long do you plan on holding it? What are your expectations? Are you using all the income? Are you reinvesting some? I know ULTY is a big topic right now, but I love these charts. They really show the dynamic structure of these. You have to understand what your plans are and what your goals are for the future, and go ahead and make the plans based on you, not me or somebody else. But this is here for you to look at. I appreciate you joining me. If you like these sheets, check it out in the description down below. There's a link where you can find those. I appreciate all the support on the channel, and we will see you next time on Simply Money.